Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is January 4th, 2013. About to finish out this first week of the new trading year, and what a big trading week it has been. I mean, obviously you had the big move on the New Year's Eve, but then the breakout we had on New Year's Day, I would say it got the market off to the right foot, I guess, for the new year. And typically there's a little dodge that goes, as the first week of January goes, so goes the rest of the year. Some people say it's the first month or the entire month of January, but either way, there's a lot of historical evidence that says as January starts off good, that the year typically goes well. There's no doubt that we've probably got off to like one of the best starts that you could ask for out of the stock market this week, particularly just because of what we got out of Wednesday's price action. It was a 4-day trading week, and only 3 of those were in the new year. So, and today we're trying to push higher. Not surprised that it's a little bit more of a struggle than it was like what we saw on Wednesday, because for one, we're well overbought. So that makes me a little bit nervous, and I'm sure I'm not the only person that feels that way. But we're fairly oversold short term, and the likelihood of a pullback would seem logical here at this point. Okay, so we'll go through my positions currently that I have open, and for those who are in the splash zone following my trades can get a update on how those positions are going. BUD, well, I tell you what, this whole time while I'm talking, I feel like I'm fighting a huge sneeze. My sneezes tend to be quite an event when they actually happen, but I'm trying to fight it here. So, but BUD, we had a stop loss at 86.60. It's been very close the entire time. The low today was 87.07. Yesterday was 86.67. So we came within 67 cents. This stock, it's impacted a lot by what we have like on the German markets and everything else. It affects how it performs. That's why you have all these gaps all over the place when it's trading, because it's reflecting the trading from overseas markets that night. But you can see here though a nice recovery, 88.27. It's not too far off from our original entry at 88.99. I don't think I'm going to move up my stop loss at all after this one move today, but I want to see it break out above that $89 level and close above that price point. So no new change in BUD, except to note the fact that it is performing well today, and that's a good sign from our standpoint, just because we got into it, and I didn't expect it to really sell off like it did early on, but we stayed in it, and it's trying to move higher, so that's good. Support held. SREV. Couldn't ask for a better trade to start the new year than what we got out of SREV here. Yesterday we got in at 603. You'll see there that it was just on the cusp of breaking out when we got in. It's at 657 right now. That's a pretty quick gain for us, particularly from a swing trading standpoint. I've got my current stop loss at 648, and when you look at the 5-minute chart, essentially I started the day off with like a stop loss at 615, about right there. I knew when it opened up, if it broke below that, it was not going to look very good on the momentum side of things. So then when it pushed higher and higher, we moved it up to 627, and now it's at 648. So we're trying to lock in gains where we can. Now we're going to lock in the gist of this trade without losing much off of where it goes from here. If it decides to indeed pull back, we'll come away with most of those gains. So this has been a great trade. It's been managed well. It's starting to get overbought here, but this stock could run for a long time. What's really intriguing about this, there's nothing in the way of resistance overhead, no moving averages, nothing. It's just complete space, which I think is allowing this thing to really run freely, like what we've seen lately. So 648, there could be another adjustment to the stop loss depending on how much more it wants to run today. If it can get into the 670s, or if it makes some freakish push it, up to $7, I would probably just go ahead and take my gains right there. But I don't expect it to go to 7, but you never know. I didn't expect it to do what it did as fast as it did. So let's go ahead and look at IDIX. This stock was asked about today. On the surface, it looks like a great breakout at 634, 635, or I'm sorry, 534, 535 price range. When somebody had asked me about it earlier, I had stated that it was at 535 at the time. I told him it wasn't a bad breakout at that point, but you got to be wary about a stock like this that in 4 days it goes from 448, actually a low of like 447, and it goes all the way up to 545. So I mean, you're talking like a whole $1 move at this point in 4 days for at that time it was a $4 stock, so it's 25%. And I really don't think that more times than not, you're not going to have an ideal edge in a stock after it's run up that much, because when it's breaking out, people are starting to see, like, you got resistance right in here back from August and September timeframe, but people are going to start selling into this move. They're going to want to book gains, because if they got in right around in here, they're up a nice decent amount. The market's made a huge run. They're probably looking to book some profits, so you're going to fight some headwinds there that you prefer not to have to fight. KWK, this has a double bottom. We've been talking about it some lately. If you get into it, you don't want to hold it beyond 269 as your stop loss. At this point, it's not a bad risk-reward setup, particularly for a $3 stock or a sub $3 stock. But the risk you do run holding it overnight is the gaps. So if you have a 269 stop on a percentage basis that's like 3 or 4%, like with Apple, or Google, or a big name stock like Microsoft, you're okay with that kind of a stop loss. But with KWK, it can easily just push right through that in a blip, stop you out, and come right back up to 278 like nothing ever happened. So you got to weigh those kinds of risks as well. It's a double bottom, and I think the closer you can get to the 269 level, the better you'll be. But so far on the day, it looks like it's given back the early morning gains. So you're really hoping that at this point, if you get into it today, that it's going to somehow make a reversal from what we've seen throughout the entire day. And that is, you got this high, lower high, another lower high, another lower high price action. So, okay, I got to probably speed it up here because I've already about a good 8 minutes into this presentation. But INFA, you got a bull flag here. I'm not really crazy about this price action here from the 2nd of January, particularly since the market was up so handedly on that day. But you do have a bull flag nonetheless that looks mighty nice. So even with that price action from the 2nd, it still stays within that range. I would look for the breakout to occur at a break of the day's high, so around 30.59, 30.60. This stock should see some kind of opportunity here to move higher. If it doesn't, I would put my stop loss at, I think the 29.90 level would be a good stop loss for this. So it's not a bad setup, actually. I think there's some potential to it, but you just have to be cognizant of the fact that you've had some strange price movements, and that could occur yet again in the near term. FSL. All right, from a perspective of already being in this position, which is how this stock was recommended me to look at. FSL, there's no clear edge to get into it, but if you're already in it, you got to be very wary of what we just saw today. And it looks like that was some really strange price action. Let's see what it looks like on the 1 minute chart. If it's, this stock went very low this morning. Oh my gosh. And it took a good 3 minutes to recover most of those gains. So it was a legitimate move. It wasn't some, misprint or anything. But that would be a huge warning sign to me, quite honestly. I would probably, if it was me and I was holding it, and assuming you've been able to hold on for a good chunk of these gains here, I would be looking at getting out of this thing. Stocks that are moving in a very positive manner don't tend to do these kinds of wacky movements. So my advice would be is play it safe. I think anytime, just in trading in general, you got to play it safe. You always got to sort of assume what could happen, if I'm not right. And this is a good warning sign that says things may be getting to a point where it's ready to change. People are getting nervous in their positions. So I don't know if there was news. I didn't check that before I went over this, but I would be very careful about holding this stock beyond today. And if it moves up after you get out, that's fine. The thing about trading is it's not about one stock. It's about consistently managing your positions from a risk averse standpoint that doesn't put you in the position to mess up your portfolio or mess up a year's worth of work with one stock. So that's the perspective I look at with every individual stock I go at. I look at the entire body of work and what is it that I'm trying to achieve over the course of the next year. All right, HHS, and I am running way behind, so I may not be able to get to all the stocks today, but I try to keep these things under 15 minutes. Nice rounded bottom in HHS. The breakout's at 608. It's about 12 cents past that. I wouldn't buy it if it pulls back to 608 today, but over like the next 2 or 3 days, if it pulled back to it, I definitely could say this would be a buy. Stop loss would likely be around 596. Overall nice position. I think it's very tradable. I would just be patient for it over the next few days to see if you can get in it. Since if you're already in it, I would say that the breakout's very solid. You got a bullish kicker here where it essentially gapped above yesterday's price action, and after having a down day, and it's pushing higher. It's really good from that perspective. You don't want it to pull back if you're long in it right now. 617 was resistance. It cleared that with relative ease. 654 would be your next resistance area, followed by 682. I would just continue to increase the stop loss on this. Now you just need to be careful though, because there's only 40,000 shares being traded on this $6 stock, so there is a liquidity issue in a stock like HHS. Excuse me. UA. All right. Yeah, I think this is more bearish than bullish. It's having trouble with the 50-day moving average as it has had in the past. I think you got to look at it from this angle here. That you have a somewhat of a well-defined channel that it's trading in, and you want to be respectful of that. It hit the top of the channel and it has been selling off ever since. So, $44.96 would probably be $45 would be where I would target for it to go to from here. If you're going to short it, probably like a stop at like 51.79. ANN. I don't see an edge in this stock. Continuously it's been selling off, so the only edge I would see it in would be to the short side. This market, it's sort of tough to be shorting, but you can see here too, it's a downward channel. I wouldn't put much faith in it getting much higher than $34 and change. So if you were to short it, put your stop at 34.05 and try to ride it down to this bottom channel here. Unfortunately, that's all I'm going to be able to get to today. I spent a lot more time than usual on just talking about the general market conditions and some different trade theories. But if you guys have any questions, feel free to hit me up in the Splash Zone or on email or on Twitter. Y'all have a great evening. So long.